Hello, investors. Welcome to Investment Made Easy. Today, we are not going to do the online brokerage. We'll do that next week. But today, I just wanted to show you a visual of all the things that I have been discussing with you and how you compile information to make a buying decision. So, we're going to use Procter & Gamble. That's the company I have been using throughout this course. I'm not making any recommendations, but I'm just using this as an educational piece. So the CEO is A.G. Lafley. He was the CEO before. He had bought the company into increased their sales into the double digits. He left and now he's back. And so we're just watching this company to see what their plans are for future. Okay. My daughter set up an arrow system here for me. Okay, here we go. You want to get some information on Procter & Gamble. Out of 7 billion people, they serve 4.8 billion people. That's awesome. That's a lot of customers that they serve. These are some of the products that we talked about last week. Bounty, Charmin, Tide, Crest, Gillette razors, Olay. I mean, are any of these products here before us something that you use at home? Your friends, your family? The other positive thing about Procter & Gamble is that these products go off the shelves. They don't just sit there. They're not sitting in a warehouse waiting. Like, say, for example, if you were looking at Ford Motors or a car company, that's how long does it take them to produce, present it to the consumers, and then make that sale? These types of products go fairly fast off of the shelves. You want to pull the current news on the company. The day that I pulled Procter & Gamble, they're taking 100 brands off of their shelves within the next 2 years to cut costs and better focus on its sales. That's one way that management is going in and, improving their company. Like I said before, you want to see what management is doing. What are their plans to make money? We talked about innovation. Here are some of the things that Procter & Gamble is doing within the community. I always pull a chart on a company. For example, let me get my arrow just to show you some things. Here's the chart. This is how the company's been flowing in accordance with the S&P line. So they're pretty consistent. Now, if you have a company and they're going like downhill, that's a decline. If they're shooting upward, that's an incline. You see a steady growth, that's not bad. But is the line just going straight across, staying about the same? So let's just look at a couple of things on this chart. Here's the 52 high and low. The highest it's been in the last 52 weeks is $85.82. The lowest is $73.61. You can look over here from 2008 through 2014. You can see the 52 highs and lows. You can compare over the year. The earning per share rating is 71. Ownership, management owns 0%. Banks own 2% of the company. Funds 26%. These are number of funds is number of mutual companies buying and selling the stock. You want to see an increase over time and not a decrease. Down here, this chart reflects this box as well. The red is companies are selling out. blue is that they're buying into it. Is there a heavy volume of companies buying into Procter & Gamble, or is there a large number of companies selling out? If there's a large amount of companies selling out, you don't want to be the one, last Mohican in here owning the shares of stocks. Here's the sales. Are the sales increasing over the year? Earnings per share, you can see if it's increasing. You can look at, we talked about the different peers in a group. It gives you the top 5. So their rating for the EPS is 71. Here's Revlon. They're 85. So their numbers look better than Procter & Gamble. So you can look into any one of these companies and you might find a better choice. Here's where it says the new CEO, 5th month of 2013. Generally, when they announce a new CEO, the stock price changes on that day. Here's where we talk about the inventory, 12.35 rating. That's the last time that they issued a dividend on 7/16. So this is a company that pays dividends. Okay. Just trying to get to the last screen here. Okay, well, the last screen I just have on the last screen, and hopefully I can get there. Let's see. Try it now. I'm new at this, but I was determined, there we go, to share a visual with you because I'm a visual learner. Questions you want to ask yourself. Is Procter & Gamble, their story, has it gotten better, worse, or is it unchanged? If it's gotten better, then you've done well with it. If it's gotten worse, this may be a time to sell. If it's unchanged, that might be a reason to sell as well, because you don't want to, if they don't have anything that's up and coming in innovation and management is going to continue to do what they're doing, well, you're going to find someone else that will make you some money. What are some of the reasons you believe the stock next year would do better? And again, like I said, find out what they're doing, what their plans are. Do you feel these industries are one that will get great growth over the decade? We're all about growth. We're all about, taking, my $100 investment and increasing it 20, 25%, or even greater than that. But if it's just 2 or 3%, is it worth my time? Is it worth my money investing it when I can get a better return with another company? Has the stock exhausted most of its growth opportunity? Google, when it came out, I'll use Chipotle as an example. It came out as a new IPO at $22 a share. It's now, in the hundreds. So that is growth. That's a growth opportunity. So you definitely, that's my own philosophy. I look for companies that will give me growth on my dollar. So I just wanted to share this with you so you can have a visual of the things that we've been talking about. Next week we will end our last class and show examples on setting up an online brokerage account. So I'm going to say goodbye for now.